And in our top business story, Dubai landlords continue to benefit from higher rental yields, with a 7.5% gross yield for apartments and 4.7% for villas across the city's most popular, affordably priced developments. That's according to the latest report. Officials from Chesterton's MENA were quoted saying that secondary locations are once again offering the highest yields, ranging from 7.7% at Dubai Silicon Oasis to 9.5% in Discovery Gardens and 9.6% at International City. They added that the villa segment still provided an overall average yield of 4.7%. The Springs registered the highest investor yield at approximately 6.4% in the first quarter, while apartment yields stood at 7.5%, with studios recording the highest figure at 8.4%. On average, there was a 0.5% decrease in apartment rental rates during the first quarter of the year, with downtown Dubai recording the highest drop of around 5%. In secondary locations, a two-bed unit ranges from 75,000 to 95,000, while at the top end, over in the DIFC, a two-bed rents for an average of 163,000 dirhams. In the villa rental market, the Palm Jumeirah homes registered a decline of just 2.5%, with three-bedroom villas renting for an average of 325,000 dirhams. Average apartment sales prices recorded a 0.7% decline, while the villa sales market recorded an average 1% decline. The report also noted a positive first quarter for transactions, up 11% quarter on quarter, totaling 27 billion dirhams. Officials added that they also saw mortgage approvals jump by over 50%. Dubai is set to hit the 100,000 hotel room milestone this month as the city aims to cement itself as a top 10 global destination in terms of available supply. According to officials from Dubai's Department of Tourism and Commerce Marketing, they stated in local reports that they expect occupied room nights in hotels and hotel apartments to reach 36.9 million, representing an 11 to 12% compound annual growth rate through to 2018. It added that the overall room supply in Dubai is expected to reach 138,000 rooms by the end of 2018. With demand increasing, overall projected occupancy rates until 2018 are expected to be around 77% despite growth in capacity, ensuring the emirate remains competitive. In the first quarter of this year, Dubai's hotels saw some of the highest global rates in occupancy, RevPAR and average daily rates at 85%, $142 and 166 respectively. Additionally, Dubai Tourism forecasts the need for continued industry pipeline growth at a compound annual growth rate of 12% between 2015 and 2018 in order to sustain a competitive market. Growth in hotel and hotel apartment inventory from year-end 2015 until the end of 2018 sees an expansion of properties with 3- and 4-star establishments expecting 16.8% and 14.4% compound annual growth respectively. Luxury 5-star hotel growth is also set to hit an 11.6% compound annual growth rate over the same period. Bank of Sharjah today announced a 4% rise in total comprehensive income for the first quarter of the year, reaching 77 million dirhams. Total assets reached 27,651 million, an increase of 6% over Q1 2015 and the same level of Q4 2015. Customer deposits reached 19,303 million dirhams, an increase of 3% over Q1 last year and a fall of 1% from Q4 2015. Loans and advances reached 15,402 million dirhams, up 7% from Q1 last year, while net liquidity remained high compared to industry levels at 6,797 million dirhams as of March the 31st this year, 6% higher compared to the same period of 2015 and 9% less than the 31st of December last year. Total equity at the end of the first quarter stood at 4,694 million dirhams, 7% above the balance for the corresponding period of 2015. Net profit for the first quarter of 2016 reached 81 million dirhams against 85 million for last year. As a result, earnings per share for the period were down by 10% and reached 3.7 fils compared to 4.1 in 2015. Wall Street Exchange, a UAE money exchange service provider and a member of Emirates Post Group, has reported a 10% growth in its remittance business for 2015. The top 5 expat nationalities in the UAE remitting money using Wall Street Exchange were Indians, Bangladeshis, Filipinos, Pakistanis and Sri Lankans. Company officials were quoted saying that the weakening of various currencies against the US dollar encouraged more expats to remit money, and few currencies reached their lowest level, benefiting expats by getting a higher exchange rate. India took the first place in the top list of top 10 remittance receiving countries, with an estimated remittance of $72.2 billion in 2015, followed by China with $63.90 billion and the Philippines $29.7 billion. That's according to the World Bank Group's Migration and Remittances Fact Book for this year. Pakistan was placed 8 on the list with remittances of $20.1 billion, while Bangladesh took the 10th spot with $15.8 billion of money received. The World Bank report also placed the UAE in the top 10 migrant destinations, which included the US, Saudi Arabia, Germany, Russia, the UK, France, Canada, Spain and Australia.